Hello and welcome to Reformed Thinking. Today is Friday, January 30, 2026.
Good to be here.
And if you've been, scrolling through the headlines this morning, maybe trying to drink your coffee,
Yeah.
you've probably noticed the news is heavy.
It is.
The Black Sea is trending again, and not for reasons anyone wants to see. It feels like every time we refresh the page, there's another notification, a drone strike, a new shipping regulation, insurance rates just spiking through the roof.
It is a heavy morning. And it's strange to say, but looking at the calendar, this specific Friday in 2026, it really does feel like a tipping point. We're looking at the result of pressures that have been cooking in a pressure cooker for, 2 full years now?
That's it. That's exactly what we need to talk about. We're going to do a deep dive into what the analysts are calling Maritime Ukraine.
Right.
But I have to stop you right there because I know what our listeners are thinking. They're thinking,
Right.
Okay, great, another discussion about naval strategy maps and crop yields. But that is not what we are doing, is it?
Not even close. I mean, the crop yields are part of it, sure. But if you only look at the bushels of wheat, you miss the actual story. We're looking at the collision of three things that don't usually hang out in the same room.
Right.
Missiles, global financial markets, and morality.
Missiles, markets, and morality. That sounds like a chaotic dinner party.
It is a chaotic dinner party, but that is the reality of the Black Sea right now. You can't understand the war if you don't understand the money. And, you can't really understand the money if you don't understand the theology behind it. As is our mandate here, we're going to look at this through a distinctively reformed lens.
Which I love because it forces us to ask the why questions.
Yeah.
So just to give everyone a bit of a roadmap so they don't get lost in the weeds, we're looking at two main streams today.
Okay.
First, we have this technical analysis. We've got a stack of research here that treats the Black Sea not just as water, but as a risk finance system.
Which sounds dry, I know. It sounds like something you'd read in an actuary's basement.
It really does, yeah.
But stick with us, because it is fascinating. It explains how a physical threat, like a drone boat buzzing around in the water, gets translated into a clause in a contract in London.
Okay.
And then eventually becomes the price of a loaf of bread in a market in Cairo. It connects the explosion to the economy.
And then the second stream is the theological one. We're calling this the stewardship of the sea. We're going to try to view these logistics, shipping containers, insurance forms, all of it through the lens of the cultural mandate from Genesis, the doctrine of total depravity, and the Westminster Confession.
We're going to see that the flow of grain isn't just an economic index. It's a battle. And I don't just mean a battle of guns, although that's obviously happening. I mean a spiritual battle between constructive dominion, feeding the world, and what our sources call a counter-liturgy of destruction.
Counter-liturgy. That's a phrase that stopped me cold when I read the notes. I want to dig into that later because it sounds ominous.
It is.
But before we get to the high-level philosophy, I have to ask the selfish question on behalf of the listener, the so what question. Why should the guy driving to work right now care about reinsurance rates for a port in Odessa?
Because that guy driving to work buys groceries. Look, the price of bread in the global south, and frankly, the stability of inflation that hits your wallet, is directly tied to whether a reinsurer sitting in a glass office in London thinks a port in Odessa is insurable.
Right.
It's all about how the reality of sin in the world impacts finance. If the insurer gets scared, the price goes up for everyone.
Okay, let's back up and start with the map, the geography itself. I think most of us look at a map, we see blue, we see land, and we think, well, that's just how the tectonic plates settled. But from a reformed perspective, looking at providence, we can't really view the Black Sea as an accident, can we?
No, we really can't. If you hold to the doctrine of providence, you believe that God orchestrates all things, including the physical layout of the earth. The Black Sea isn't just a puddle. It's a bridge. It connects the resource-rich East, the breadbasket of Europe, with the West and the South. It is a providential arrangement designed to facilitate the distribution of the Earth's resources.
And you're connecting this to Genesis 1.28, the cultural mandate.
I am. Be fruitful and multiply and fill the earth and subdue it. We often think of subdue as farming or maybe building a house.
Sure.
But implicit in that command is development and distribution. You can't fill the earth if you can't feed the earth. The seas, in this view, are designed by God as highways. They are the infrastructure for commerce to distribute what theologians call common grace.
Common grace being things like sun, rain, and in this case, grain and sunflower oil.
Exactly. God provides the harvest. That's his grace. But he uses human means, ships, sailors, markets, contracts, to move that harvest from where there is plenty to where there is lack.
So when I see a bulk carrier ship loaded with wheat navigating the Bosphorus Strait,
Yeah.
I shouldn't just see a commercial transaction.
No.
I should see the cultural mandate in action.
You should see stewardship. You're seeing humanity acting as a steward of God's creation, moving resources to sustain life. That is a good and holy thing.
But that brings us to the conflict. Because if the sea is a highway for common grace, designed by God for that purpose, then the war we're witnessing isn't just a territorial dispute. It sounds like you're saying it's an assault on that divine order.
That is exactly what I'm saying. The war is an attempt to weaponize hunger. It's a deliberate blockage of that distribution system. It's saying, I will use the starvation of others as leverage for my political goals.
That's dark. But here's the thing that confuses me. We hear all this doom and gloom. The UN Grain Initiative collapsed way back in 2023.
Right.
And everyone said, that's it. Ukraine is landlocked. The trade is dead. But I'm looking at the numbers for January 2026, and they just don't match that story.
The numbers are shocking, honestly. They really are.
I have the stat right here. The unilateral Ukrainian corridor, this makeshift route they built after the UN deal fell apart, has moved 168.9 million tons of cargo by January 2026.
Yeah.
And 100 million tons of that is grain.
168.9 million tons. I mean, just try to visualize that. That is an ocean of food.
It's mountains of wheat. It's unbelievable.
It's a paradox, isn't it? On one hand, you have missiles flying, insurance rates spiking, people saying it's impossible. On the other hand, you have this massive volume of cargo moving. It's a testament to perseverance. It shows that the drive to exercise constructive dominion, to do business, to feed people is incredibly strong. It pushes back against the chaos.
So the trade isn't dead, but it sounds tired or stressed, maybe.
It's extremely fragile, it's functioning, but it's functioning with a gun to its head.
Okay, so we have the theological baseline. The C is for stewardship. Now I want to get into the mechanics. How does this actually work? Because the source material uses a formula that I want you to unpack. It says Maritime Ukraine is defined as operability multiplied by insurability.
Right. This is the technical heart of the deep dive. And think of it like a math equation. If either side of that equation is 0, the result is 0.
Explain the two sides.
Okay, so operability is the physical side. Is the water deep enough? Is the channel dredged? Are the cranes working? Can the ship physically float from point A to point B?
Okay, simple enough. If the port is bombed into rubble, operability is 0.
Correct. But then you have insurability. This is the financial permission to sail. You can have a pristine port, a brand new ship, and calm waters. But if the voyage isn't commercially viable, meaning if the insurance is too expensive or just plain unavailable, that ship will not move. It will sit at the dock until it rusts.
It's like having a perfectly good car in your driveway, but you can't drive it because you don't have insurance and you can't afford gas. The road is open, the car works, but you are stuck.
That is a perfect analogy. And in the maritime world, you cannot legally move a commercial vessel without insurance. It's not optional. So the war attacks both sides of that equation. It attacks operability with missiles, and it attacks insurability with risk.
Let's dig into that risk part. The source material breaks down how risk translates from a bang in the water to a line item on a budget. There are 4 steps or translations. The first one is conflict to risk variables.
Okay, so imagine a missile strike hits a harbor. That's a kinetic physical event. Fire, smoke, damage. But for the market, for the guys in London suits, that event is data. It changes the frequency and severity of expected loss.
It's not just, oh, that's sad. It's, oh, the math changed.
Right. They update their models. Yesterday, we thought 1 ship a month might get hit. Today, the data suggests it might be 2. That's the first translation, from event to variable.
Then we get to the second one, which uses an acronym, HEV, hazard, exposure, vulnerability. Break that down for us.
Yeah, this is how risk professionals categorize the danger. Hazard is the threat itself. The mines, the drones, the missiles, is the water full of explosive stuff.
Okay.
Exposure is where your assets are. If you have 10 expensive ships all sitting in a port in Odessa, your exposure is high. If those ships are out in the Atlantic, your exposure to the Black Sea War is 0.
Makes sense. And vulnerability.
Vulnerability is how susceptible those assets are to the hazard. Are the ships protected by air defense systems? Are the grain silos made of thin metal, or are they reinforced concrete? Do they have fire suppression crews nearby?
So the market looks at all 3.
Right.
And if you have high hazard, high exposure, and high vulnerability,
The price goes through the roof. Or they just refuse to insure you at all. It becomes a no-go.
Which leads to the third translation, operational to insurance pricing. This brings up the uncertainty premium. I find this fascinating because it feels like a tax on ignorance.
That's exactly what it is. Here's the secret about insurers. They hate uncertainty more than they hate actual risk.
Wait, isn't their whole job risk?
Their job is calculated risk. If I tell an insurer there's a 10% chance my house burns down this year, they can do the math, charge me a premium, and make a profit. They're fine with that.
Okay.
But if I say, I have no idea if my house will burn down, maybe yes, maybe no, I can't see the house, I don't know if the fire department exists, the insurer panics.
They can't do the math.
They can't do the math. So what do? They assume the absolute worst case scenario to protect their own money. They charge you a premium that covers total disaster just in case.
Right.
That extra cost, that is the uncertainty premium. You're paying for their lack of information.
So when the fog of war descends on the Black Sea, and nobody knows if the mines are cleared or if the radar's working, the price spikes, not just because it's dangerous, but because it's unclear.
Precisely. And that leads to the fourth translation, insurance to market outcomes. This is the chain of vetoes.
The veto points. This is why it's so hard to get a ship moving.
Right. It's not just one guy deciding, let's go. It's a chain. The ship owner has a vote. He wants to protect his asset. The charterer has a vote. He wants his cargo moved. The bank financing the ship has a vote. They don't want their collateral sunk. The insurer has a vote. And the crew has a vote.
If any one of them says no,
the ship stays put. It's a series of gates. If the crew says, it's too dangerous, we won't go, the owner's yes doesn't matter. If the bank says, we won't authorize this route, the captain's bravery doesn't matter.
This system seems incredibly fragile. You don't need a physical blockade to stop trade. You just need to scare the bank.
Exactly. You can blockade a country with fear and paperwork just as effectively as you can with warships.
This brings up a theological reflection that was in our notes. This friction, this nightmare of getting all those yes votes, the high costs, the fear, is described as the economic thorns and thistles from Genesis 3.
It really fits, doesn't it? In Genesis 3, after the fall, God tells Adam that the ground is cursed. It will produce thorns and thistles. Work will be hard. It will be sweaty and frustrating.
And usually we think of that as, weeds in a garden.
Of course.
Yeah.
But in the maritime logistics world, thorns and thistles look like 200-page insurance contracts with war exclusion clauses. They look like high premiums. They look like the fear that keeps a crew from signing on. Economics isn't morally neutral. It is the quantification of human action under conditions of scarcity and sin.
I want to repeat that because it's a heavy definition. Economics is the quantification of human action under conditions of scarcity and sin.
It strips away the idea that markets are just cold, unfeeling numbers. The market is reacting to moral realities, to war, to theft, to the threat of death. The high price is a reflection of the sin in the environment.
Speaking of sin and threats, let's move to the hardware. We talked about total depravity earlier, the idea that human nature is corrupted and capable of great evil. How are we seeing that unleashed in the Black Sea right now between 2024 and 2026?
Well, we're seeing a distinct shift in intent. Early in the war, you could argue, maybe, that strikes were tactical, hitting a naval base, hitting a fuel depot.
Sure.
But now, our sources call it a policy of starvation.
The numbers back that up aggressively. In 2024, there were 36 recorded attacks on port infrastructure. Significant, but, maybe manageable. By the end of 2025, that number surged to 96 attacks.
That's nearly a tripling of violence specifically directed against the food supply chain. And look at this data point. Of the 651 port facilities damaged since the invasion began, 325, exactly half, were struck in 2025 alone.
So while the world might be getting war fatigue and paying less attention, the intensity of the destruction is actually peaking.
It is ramping up. And the weapons being used, the Iskander-M ballistic missiles, the Kh-59 guided missiles, the Shahed drones, these are the key verbs in a sentence of destruction. They are being used to articulate a message. We will destroy your ability to feed the world.
And it's not just the stuff falling from the sky. There are threats in the water that I find even more terrifying because of their randomness.
You mean the drifting mines?
Yes. The notes call this a hidden threat or a lawless danger.
Think about the morality of a drifting mine. A missile is aimed. Someone pushes a button and targets a coordinate. It's an intentional act against a specific target, a drifting mine. You drop it in the water and let it go. It floats with the current. It doesn't care if it hits a battleship, a grain ship, or a fishing boat full of civilians.
It is indiscriminate.
It is completely indiscriminate. It creates a zone of terror. We saw that recently with the neutralization of mines in the Odessa and Romanian sectors. But the psychological effect is massive. Every wave could be a bomb.
And then there's the active threat, the uncrewed surface vessels, or USVs. We usually hear about Ukraine using these against the Russian Navy, but the tables have turned, right?
They have. The aggressor is using them against commercial ships now. This changes the calculus for a captain. You aren't just looking for a periscope or a gray hull on the horizon. You're looking for a small, low-profile drone boat that barely shows up on radar speeding toward your hull at 40 knots.
And the sanctuary of the rivers is gone, too. For a long time, the Danube, Ports Rheni, Izmail were considered the safe back door.
They were the lifeline. But the data shows cargo handling dropped 16.9% in the fourth quarter of 2025.
Wow.
And why? Because the drone strikes moved there. The sanctuary was breached.
The UK Chamber of Shipping has designated the northern Black Sea, specifically north of 44 degrees N, as a warlike operations area. That sounds like official bureaucratic speak, but theologically you had a thought on that.
I did. When you designate a body of water, a part of God's creation intended for connection, as a warlike operations area, you are acknowledging that it has become a domain of death. It connects back to that phrase we mentioned, counter-liturgy.
Right. Let's unpack counter-liturgy.
Okay, so a liturgy is a pattern of worship. It's how we order our lives towards what we love. True worship involves honest work, stewardship, feeding the hungry. That's a liturgy of life. It honors the Creator. What we're seeing with these attacks targeting grain, burning silos, mining the sea, is a worship of destruction. It's a ritual dedicated to ruin. It is an anti-creation force.
That is a chilling way to look at it. It's not just strategy. It's a spiritual rebellion against the idea of flourishing.
Precisely.
Now let's talk about the targets themselves. We talked about ports. Why are ports such critical leverage points? Why not just hunt the ships in the open sea?
Because the sea is big and ships move. A port is a fixed target. It's a high centrality hub. Think of it as an ecosystem. A port isn't just a concrete slab. It's cranes, silos, power stations, rail lines, pilots, tugboats, customs officers. It's a complex machine.
And like any complex machine, if you break one part,
The whole thing stops. You don't have to blow up the whole port. You just have to take out the power substation that runs the cranes. Or destroy the pilot boat so no one can guide the big ships in. It's much easier to disrupt a node than to control the whole network.
the notes mention operational fragility.
Yes. And this is where we have to talk about variance. In logistics, variance is the enemy.
Explain that.
Well, if I know a port is slow, but it's always slow, I can plan for it. I just add 2 days to my schedule. No big deal. But if a port is fast one day and then closed for 3 days because of a drone alert and then open for 6 hours and then closed again, I can't plan.
And this leads to the laycan problem.
Right. Laycan stands for lay days and canceling. It's a standard clause in shipping contracts. Basically, it's a delivery window.
Give me a real-world comparison.
Think of it like a brutal dinner reservation at a high-end restaurant. You have a table reserved, but you must arrive between 7.0 and 7.15. If you arrive at 7.6, not only do you lose your table, but the restaurant might sue you for wasting their time.
This is stressful.
Now imagine trying to hit that 15-minute window when you're driving through a war zone, dodging drifting mines, and your GPS is being jammed by electronic warfare.
And if you miss the window?
The contract fails, the deal is off, the grain sits in the hold, and you start losing money by the hour. That is what variance does. It destroys the ability to contract.
We can't forget the human element here either. We talk about systems, but there are people involved.
Of course. Pilots, stevedores, crane operators, they have to be willing to go to work while air raid sirens are screaming. If the labor force decides it's too dangerous, the port stops working. It doesn't matter if the cranes are pristine. If the operator is in a bomb shelter, the ship doesn't load.
And the crews on the ships.
Companies have crew welfare thresholds. If the union or the company decides the risk is too high, they simply won't sail. Or the crew will refuse to board. You can't force civilians to sail into a warlike operations area.
Which leads us perfectly into the economics of this, the price tag of that fear. We saw a massive spike in insurance premiums in January 2026.
We did. Following those drone strikes on oil tankers, premiums jumped. They went from roughly 0.6% or 0.8% of the whole value to a full 1%.
1% doesn't sound like a big number. If I tip 1% at a restaurant, I'm a monster. But in shipping, that's huge, right?
It's massive. Let's do the math. Take a standard bulk carrier ship. It's worth, say, $20 million. A 1% premium means you pay $200,000 in insurance.
$200,000 per year.
No, per voyage,
Yeah.
sometimes for a period as short as 7 days.
$200,000 just to be allowed to float there for a week.
Correct. That's a massive overhead. It's a tax on existence. And who pays that? Ultimately, it comes out of the price of the grain. It makes Ukrainian grain less competitive. The farmer gets paid less, or the buyer in Egypt pays more.
And it's not just the cost, it's the volatility.
Yeah.
You mentioned something about the policy review period changing.
This is wild. Usually you get a quote and it's good for a week or so. Now, in 2026, underwriters are reviewing policies every 24 hours.
Every 24 hours.
Yeah. Imagine trying to run a business where your insurance rates change every single day based on the morning news. It reminds me of James 4.1314. Come now, you who say, today or tomorrow we will go into such and such a town and spend a year there and trade and make a profit, yet you do not know what tomorrow will bring.
That verse is literally the operational reality of the Black Sea right now. Tomorrow is no longer a guarantee, but a calculated risk.
Exactly. And insurance acts as the gatekeeper. And it's not just about price, it's about capacity and terms.
Define those.
Capacity is simple. Does the insurance market have enough money in the bank to cover the risk? If the risk gets too high, the money dries up. Terms are the fine print, the exclusions. We'll insure you, but not if you get hit by a nuclear weapon, or not if you are in this specific bay.
But the big fear you mentioned in the notes is aggregation risk. What is that?
That is the nightmare scenario for an insurer. Imagine you insure 10 ships. If they're all spread out over the Atlantic Ocean, the chance of all 10 sinking at the same time is basically zero.
Right.
But now imagine all 10 of those ships are stuck in a queue at a port in Odessa because of delays. They're sitting right next to each other.
And a missile strike happens?
You could lose all 10 at once. One event triggers 10 payouts. That is aggregation risk. It threatens the insurer's entire balance sheet. So when congestion builds up at a port, insurers panic. They pull back. They refuse to write new policies because they have too many eggs in one basket.
It's all connected. The physical delay causes the financial panic. This brings us to the feedback loop mentioned in the outline.
The two-way feedback loop.
Right.
This is the model our source uses to explain the whole system. It goes like this. A security shock leads to port disruption. Port disruption leads to insurance tightening. Insurance tightening leads to trade reconfiguration.
Trade reconfiguration sounds polite. It basically means people finding new, desperate ways to move stuff.
It does. And that creates new exposure, which then leads to an updated security risk. It's a circle. The system isn't passive. The actors learn and adapt.
We've seen some positive adaptation. The humanitarian corridor established back in August 2023 was a massive adaptation.
It was a market test. They proved they could route ships close to the shore, under the cover of coastal defenses, and make it work.
But the bigger positive adaptation is the Unity facility.
This is a crucial piece of the puzzle. It's a structure created by Marsh McLennan, the Ukrainian government, and Lloyd's of London.
What does it actually do?
It creates a risk-sharing pool. Basically, the government puts up some money to backstop the private insurers. It says, if things go really bad, we'll cover the first slice of the loss. This gives the private market the confidence to keep writing policies. It stabilizes that capacity we talked about.
It handles any aggregation risks so the private companies don't flee.
Exactly. It uses public money to keep the private market functioning.
We're also seeing domestic consolidation. Ukrainian firms like Kernel and MHP are moving to value-added processing.
This is smart. Instead of shipping raw grain, which is bulky and cheap, they process it into oil or meal inside Ukraine. It's higher value, takes up less space, and creates more jobs locally. It reduces their reliance on those massive raw export logistics.
Those are the good adaptations. But we have to talk about the dark side of the loop, the negative adaptation. This is where it gets criminal.
The shadow fleet.
This sounds like a movie villain plot.
It honestly does. In 2025, Russia stole over 2 million tons of grain from occupied Ukraine.
2 million tons?
Yeah.
That isn't just a truckload. That's industrial-scale theft.
It is looting. It violates the 8th commandment, thou shalt not steal. It robs the farmer who grew it, and frankly, it robs the global poor because it distorts the market.
How are they moving it? You can't just hide a giant ship.
You can if you break the rules. They use a shadow fleet. We've identified 45 specific vessels and 39 captains involved in this. They turn off their AI's transponders so they go invisible on tracking apps. They paint over names. They spoof their GPS locations.
And where does the grain go?
They launder it. They take it to ports in Syria, Egypt, or Turkey. They mix the stolen grain with legitimate grain in a silo so you can't tell which is which. Then they issue fake paperwork saying it came from Russia.
It is state-sponsored piracy.
It is. It's a mechanism of theft built into the maritime system, and it's a direct challenge to the idea of honest commerce.
This leads us naturally to the ethical analysis. We're looking at this through the just war tradition.
We must. The Westminster Confession, chapter 23, speaks of the civil magistrate, the government. It says the magistrate is ordained to be a terror to bad works.
So defending the corridor
Is a just war application. We talk about jus ad bellum, the right to go to war, and jus in bello right conduct in war. Defending these ships is not an act of aggression, it's policing. It is protecting the innocent against theft and violence.
And we are talking about protecting actual innocents, mariners from neutral nations.
That's a key point. These aren't combatants. In January 2026, a Russian strike on a civilian vessel killed a Syrian crew member.
Just a guy doing his job.
Exactly. He wasn't a soldier. The strikes on ships carrying corn and vegetable oil near Kornomorsk. These are not military targets. Attacking them violates the sixth commandment. Thou shalt not murder.
So the goal of the civil magistrate here isn't just to ensure the risk, but to suppress the threat.
Justice requires suppressing the threat. You can't just pay for the damage after it happens. That's just compensation. Justice is stopping the damage from happening. That's deterrence by denial.
Deterrence by denial.
It means making it so hard, so expensive, and so ineffective to attack the trade that the enemy stops trying. If every drone is shot down or if the ports are repaired so fast that the strike doesn't matter, the strategic payoff of the attack drops to zero.
It takes the win away from the aggressor.
Exactly.
So looking ahead, we're in 2026. What does the future look like? Our sources outline 3 potential scenarios. Walk us through them.
Okay, scenario 1 is chronic attrition. This is the muddle-through scenario.
Sounds exhausting.
It is. It means the danger persists. The premiums stay high, maybe not 1%, but high. Reliability is degraded, but trade continues. The problem is that only the most robust operators, the big guys with deep pockets, can survive. The small players, the niche carriers, they get pushed out. It becomes a game for giants only.
Scenario 2.
Escalation shock. This is the scary one. A tail risk event happens.
Give me an example.
A massive casualty event. A cruise missile sinks a ship with all hands lost. Or a major port terminal is completely leveled. This causes an insurance stop.
The insurers all quit at once.
Capacity is withdrawn. Sorry. Too dangerous. We're out.
Ah.
The loop breaks. Trade freezes overnight.
And the third scenario.
Stabilization. This is what we hope for. Resilience measures work. We get better at shooting down the drones. We get faster at repairing the ports. The uncertainty goes down because we have better data. Insurance terms improve. The thorns and thistles are cut back a little bit.
So how do we get to stabilization? What are the recommendations for stewardship?
It comes down to 3 things, really. Reduce hazard, reduce vulnerability, and reduce uncertainty.
Reduce hazard means?
Stop the physical threat. Better domain awareness. Knowing where the mines are. Demining operations. Missile defense.
Reduce vulnerabilities.
Harden the ports. Build concrete shelters for the equipment. Have rapid repair teams on standby so if a crane is hit, it's fixed in 2 days, not 2 months. Cyber resilience so the GPS works.
And reduce uncertainty. You said this was surprisingly important.
It is. Remember, insurers charge for ambiguity. If you want lower prices, you have to give them better data. You have to be transparent. Here is exactly what happened. Here is exactly what we're doing to fix it. If you make the risk legible to the market will price it more fairly.
And finally, risk sharing.
Structures like the Unity facility. We need public institutions to handle that correlated tail risk, the big disasters, because the private market simply cannot absorb that alone. It's a way for the nations to share the burden of maintaining the peace.
It feels like we've covered a massive amount of ground, from the theology of the sea to the fine print of insurance contract.
We have, and I think that's the power of this deep dive. It reveals that Maritime Ukraine isn't just a place. It's a coupled system. You can't separate the finance from the logistics, and you can't separate either from the theology.
The final thought on operability x insurability really sticks with me. The viability of the corridor depends on both the physical ability to load grain and the financial permission to sail. 2 keys to the same door.
You need both to turn.
As we close, I want to leave our listeners with a provocative thought from our source material. We referenced Psalm 107 earlier. They that go down to the sea in ships that do business in great waters, he maketh the storm a calm.
It's a beautiful promise.
The storm in 2026 is fierce. The cost of depravity is high. Those 1% premiums are real money that could have fed people. But the persistence of this trade is a witness. It's a witness to the resilience of life against a theology of ruin.
It's constructive dominion fighting back against the curse.
And here's something for you to chew on. If the insurance market is the mechanism discerning acceptable risk, does that make the underwriter a strange kind of theologian?
That is a profound question to end on.
Are they, in their own way, calculating the weight of sin in the world?
Calculating the weight of sin and putting a price tag on it, it's a sobering thought.
Indeed it is. Thank you for joining us on this deep dive into the stewardship of the sea. We hope this gives you a new perspective the next time you see a headline about the Black Sea.
It's always a pleasure. Keep thinking.
Stay curious, and we'll catch you on the next one. Goodbye.